What's going on, guys? Welcome back to the channel. Meathead Money here, and today we're going to be talking about PayPal. So I got some exciting news with PayPal. I'll go through a couple articles, check out the finances, and do some technical analysis and kind of see where this thing is tracking. So at that, let's dive into it here. Okay, so PayPal, ticker symbol PYPL, currently trading at 69 or $66.99. Over the year, we're down about close to 8%. If we go to some of the ratings here, see what Wall Street says about it. So right now, their current price target is right around $72. With a little bit potential here, up in the higher 145s. However, we're looking at probably like an 8% upside from where we're at currently. Go back to summary, we can see quite a few analysts out here that have been making quite a bit of articles on this. Pretty popular stock as of lately, but a lot of these are buy holds, all pretty positive for the most part. So at that, let's jump into an article here. So this one is by MS Research. Was published March 28th. His rating on this one is a strong buy, so we'll kind of dive into it. So that was a pretty good article. It kind of gives a background of PayPal, their direction that they're heading, some of the recent news, and then some of their hurdles that they've got here coming up. So PayPal overall, for those of you that don't know, a platform that enables payments for consumers and merchants through digital and mobile channels worldwide. That's kind of their bread and butter. So back in 2021, they had a price real close to about $309. And then since then, the stock has pretty much just plummeted. It's down over 80% since their highs. Recently, with some of the positive news, is that Alex Chris had replaced Dan Schulman, CEO, back in September of 2023. So the company as a whole is kind of doing some restructuring. Chris has a pretty decent background and has done pretty good for other companies. That'll come up later on here in the article. As an overview here, so PayPal, makes up 90% of its revenues from fees in which transactions are made between basically different PayPal accounts. And basically their value that they offer to consumers. The big one is security. So a lot of people will use PayPal because it has been a pretty secure method of payment, especially if you're using like foreign transacting between foreign companies and countries. So that's been pretty popular. And one of the big benefits of actually using PayPal opposed to some of the other competitors, PayPal aims to solidify their product by growing their active users, and also expanding and pursuing partnerships with already implemented companies such as like Uber, Meta. Those are already in place. But they've been working to also try outsourcing to other companies to implement their payment strategy to make it simple. And then obviously that simplicity drives up their active users and active accounts across these different platforms here. So Alex Chris, he was the executive vice president and general manager of Inuit Small Business and Self-Employed Group. And while he was there, he was able to grow Inuit's revenue 23% over the past 5 years, and led to Intuit's 12 billion acquisition of MailChimp. So some positives there. Overall, he's just a smart guy, very business focused. And their main focus right now is trying to address the $110 trillion potential market available that they're trying to tap into. So they've got a lot of opportunity out there. Yes, there's competition, but I think PayPal, from the security aspect of it, has that going for them. They've been around for a long time, so they got kind of their name built around them, kind of like the brand. And I mean, let's face it, they've still been once we get into the financials here, we'll see as a business, they've actually been improving and growing even through some of these negative times that we're in right now. One being high interest rates and inflation. So that's one issue right now. Obviously, PayPal is based on consumer discretionary purchasing, from consumers. So with the economy the way it is, we got high inflation rates that puts pressure on the consumers to go out and buy things, and using PayPal to transact through. So, once inflation comes down, once we get consumer discretionary purchasing activity higher, that's only going to benefit PayPal. And in the short term here and through COVID, and inflation rates and such, PayPal's actually been performing well. And there's really no reason in which, the stock market should be kind of bashing it as much as it has been, but that's just the way it is. Another acquisition, this was back in 2021, I believe, was a Paydi. It's a Japanese digital currency company similar to PayPal. So they acquired them basically to tap into the Asian expansion. Again, part of Alex's plan is to kind of tap into that broader, consumer base, and this is definitely one way to do it. This is obviously before Chris was in the position he's at now. However, he can still take that further, and improve on it. So financially, PayPal's revenues have increased by roughly $2.3 billion, or by 8% compared to 2022. And that was driven primarily by total payment volume of 3% of existing customers within PayPal. Operating expenses increased by about 4%, which isn't the best, but a lot of that was due to transaction expense increases, and then offset by reductions in sales and marketing expenses, some restructuring, and other aspects of that. However, operating income did increase by 31%, and their margins increased by 17% from 14% by 2023 to 2022. All good positives there. This is just a snapshot of the financials. We'll dive into that a little bit more here. This is a nice little graph. So it shows active accounts. So from 2021 to 2023, active accounts haven't grown, which from the stock market perspective, some of the guys on Wall Street kind of saw this as a bad thing here. I don't really see it as such a negative, just because, okay, so they have all these accounts. Doesn't necessarily mean that, like, people sign up for an account, they're not necessarily using it. So really, PayPal sees more benefit in, yes, increasing the active accounts, but also people that have these accounts they're actually using PayPal, with the account. So they're not just signing up for it, say like a one-time transaction to your buddy for, a late bender one night. But it's actually this continued use, repetitive use of people within their accounts doing it. So a number of payment transactions. So even though that accounts kind of were stagnant, if you will, the number of payment transactions had increased over the year from 2021 to 2023. Again, keeping in mind that we're in this high inflation, kind of downward trend of consumer discretionary purchasing. And then total payment volume, that's the big thing that they're trying to hit on, that has, gone up quite a bit. So that's their main target, right? I mean, you don't necessarily need to grow your active accounts to grow your payment transactions within those accounts. So that's great seeing that. And just again, kind of another graph here of transaction revenue. So from 2021 to 2023, again, that has been increasing, and revenues from other added sources, that has continued to grow up, but their main focus is the transaction revenues for people using PayPal. So intrinsic value, he had done some calculations on here. I'm not going to go into it too much. You can kind of see it, but he, is rating this at about $104 for intrinsic value. He kind of explains how he did it. And then he basically came up again with $104 per share would be what he would see as a fair market value, which would be like a 60% potential upside. And then just going back into the risks. So PayPal's business model obviously is heavily reliant on people going out, buying things and using PayPal. So with inflation rates high, that's hurting us. And again, until we know really what happens here with the Fed rate cuts, if they're going to cut rates, how that's going to affect the economy is really going to kind of, drive on how PayPal could potentially do here in the upcoming quarters and towards the end of the year. So that's really that article. I'm going to jump on to Seeking Alpha here. We can go into the financials, dive a little deeper into this. So net income, back from, we'll just go from 2020 or 2018 up until December of 2023. We can see that that has grown, which is good. Debt, short-term debt has decreased, and their, cash flow here has also increased over the years, which is great. We'll get into that. I also did a intrinsic value to what I think the fair value of it would be to kind of compare what the analyst said, just to kind of get both sides here. And yeah, so again, liabilities, those have gone up a little bit, but let's see. Yeah. And then the other great thing is that their outstanding shares have actually decreased, which means that PayPal is actually buying back shares, which is good because that means that some of this revenue that they're getting, that we see in like the income statements and what they're showing for revenue dollars isn't necessarily be from diluting shares. It's actually from profits that they're getting from the company. And as a stockholder, if you're invested in this company, this is good because stocks you own have more value. They're not just simply throwing out more shares for people to buy up, and then they're obviously using that money back in the company. They're actually buying back shares. So also a positive, I feel. And then again, revenues, we can see those have been increasing over the years. And overall, I mean, financially, the company looks pretty sound, pretty good. So the fact that, the stock has been downward trending here the past, couple of years, I don't know if it's necessarily fair. But, again, that's Wall Street for you. So could be a good opportunity here, but we'll see. So if I go into my intrinsic value here, so I use both Graham's formula. There's kind of the standard, then there's kind of more of a stringent formula. So I plug both those numbers in based on the EPS growth rate, and then the current yields of the corporate bonds, which is about 5.3 right now. I get a intrinsic value about $101. And if you go with a margin of safety of 20%, you're looking at a buy price of $80.77. So right now with the stock at just basically $70, it's a good potential buy from a value standpoint. The more stringent side, these numbers remain the same. The big difference here is the the G factor here, going from a 2 to a 1. So this then brings it down to a $62.82 buying. And then if you go to 20% margin of safety, you could put a strike price, you'd be looking at about $50.26, which the stock actually did come close to that prior months. So again, between this call it $50 to $80 range might be a good area to kind of pick up stocks if you're looking to invest. And then if you go from the discounted cash flow analysis model, which is what the previous article was based on, basically you're plugging in free cash flow from prior years, getting an average growth rate. I picked a pretty, what I felt was conservative growth rate at 15%. So, I mean, as you can see here, they had some downturns, but then they really kind of started turning the corner. So in average, it was 53. Some of these I feel like are kind of skewed. So, just keep that in mind. But I think 15% is pretty fair. So if you plug in a 15% growth rate, you come in, roughly about $101 per share, which is close to what the other previous analysts had. You throw in a 35% margin of safety on that, and that's essentially what your share price would come to. So if you didn't have a margin of safety in there, their average price they're saying is basically $156. So I always like putting a margin of safety in there. It gives you a little bit of buffer. Either way, though, based on both cash flow analysis and then Graham's formula here for just general valuation, Graham's valuation. Both, at least right now, the stock shows to be in a good buying spot if you're looking to invest. If we go to the charts here, So right now, it would go into the 1 year chart. So we can see here, we touched at around $78. And since then, we've really been in this downward trend. Resistance from basically the 200, the 100, 48 for the most part, but really it's been between the 200 and 100. We've really been pushing off of this, bouncing off. So our target zones right now, with it coming down, we can see we did touch this $56 range. And otherwise, morally support, it got right around $58. And it's kind of been bouncing between there and $60. Now, the optimistic thing, as we can see here, we have our 15-day moving average did cross the 200, which kind of a possible indicator for a golden cross here, which is a very bearish trend for a stock to start occurring. So it actually didn't. It kind of got above the 200 here, and then it got rejected, gapped pretty far down from 64, even close to $70. It got basically rejected all the way back down to $56. Since then, it's been kind of moving back in the upward trend. And again, now we're at this kind of golden cross signaling here again, which is a little bit more bullish, especially because we've closed now a couple times above this line. So this is a very good indicator that the stock potentially, continue to increase, especially if we keep bouncing off of this 15-day moving average. So we'll have to keep tracking this. However, I do feel, again, this is just my opinion, not financial advice, but if you're looking to, do some long calls or position yourself and start buying up shares for PayPal, I feel like this is a somewhat safe play at this point, especially because now, if for whatever reason the stock starts to come down, you could kind of hedge your position back to even this 50-day mark. So you could do short plays from current stock price close to $70 and play it back down to 64 if it does come that direction. So you could do some vertical spreads. There's a lot of things you could play with this. But overall, I think it's a pretty bearish, or excuse me, bullish stock right now. But I mean, as we can see here, this thing has kind of been through the work. So, it's definitely hit that peak, right around that $308. And ever since then, it's crashed pretty hard, even below where it had started previously. And we have definitely been in a bear trend here. So, tread lightly. Like I said, we are in this potential golden cross opportunity where we could see this thing continue to grow. But because this thing has been beat down for quite a while, as we get into these entry points, just have to be mindful that, this thing could start coming back down just as quick as it, went up. So just keep that in mind. Hopefully you guys liked the video. Subscribe, hit the like button. Be more videos to come. Until then, I will catch you on the next one. Hope you guys like the video. Thanks.